This is Chad Toyne with your Monday, May 11 Market Minute from Trader PhD Ag Marketing. Get out your pencils. It's time to update our overhead price targets. Leave these signals with your merchandiser so when the futures market hits these targets, it automatically triggers a cash sale. If we are bullish on a market, and hopefully you are too, but the market rallies, hence the bullish stance, you might want to consider buying courage calls so that you can still participate in the upside. If you've been doing that in the monster market in cotton, then you know exactly what I'm talking about. Some big bucks there. Corn and soybeans have been nice lately too, but when we are just chopping around and we're getting a little boost in the market hitting a trigger, courage calls might only be used to give you the courage to sell if you fear of missing out on the upside anyway. The business of marketing is very much a psychological struggle, so do what you need to do that winds up being what's best for your bottom line. So factor in your own mindset as well as the market's weather and geopolitics. So here we go. Corn, old crop 25 now, July at $4.98. New crop 26 stays December at $5.19. Soybeans, old crop 25, new target July at $12.57. New crop 26 stays November at $12.24. Chicago SRW wheat, old crop 26 now, July 26 at $6.81. New crop 27 stays July 27 at $7.31. No change in KCHRW wheat. Old crop 26 stays July 26 at $7.54. New crop 27 stays July 27 at $7.53. No change in Minneapolis HRS wheat. Old crop 25 stays July at $7.39. New crop 26 stays September at $7.54. Cotton, old crop 25, new target July at $94.93. New crop 26 stays December at $91.24. And by the way, I am bullish all of the above, so consider courage calls when making these potential cash sales. President Trump rejects Iran's counterproposal on Sunday. Iran submitted no mention of curbing, let alone eliminating, nuclear activity. Trump says it's totally unacceptable. Crude prices went up, along with corn, beans, and wheat. Soybeans gapped open higher here this morning, and they traded softer all day, although still in the green. This puts in a little reversal bar, and that might slow down the bean market for a while. Let's see what tomorrow's WASDE report brings. But really, all of the markets are waiting for the Trump-Xi summit in Beijing on Thursday and Friday. China has not been buying soybeans, and this likely means two things. Number one, China wants to have the maximum leverage going into negotiations. And number two, China then has more room to buy soybeans because they've been holding off. With so much anticipation of China buying soybeans going into this summit, a lot of speculators have already bought. More on where the funds are here in a minute. But if China agrees to buy an expected amount of beans, we will likely see a buy the rumor, sell the fact type of action. That is, the rumor that they will buy beans has already gone around and people have already bought. And when their buying is confirmed and then is fact, sellers will come in, cashing in on their purchases, and that pushes prices down. But what some don't realize, China might agree to buy a lot more soybeans than anyone expects, and overcommitment might shock the soy complex. A really shockingly high number could bring even more buyers to the table, but then that brings yet another problem. The Commitment to Traders report came out, and holy cow, are the funds long. They are long 344,000 contracts of corn. They're long 213,000 contracts of beans. And not only are the funds long soybeans, but they are long the soy complex as a whole, beans plus oil plus meal, at record levels. And now you're going to go into this China summit. It's going to be hard to keep the market up unless something extraordinary happens. And here's where it gets interesting. The amount of soybeans announced might be unbelievable, a very high number, but maybe too high for people to believe that it's actually going to come true. Or there could be a timed escalation with Iran that could spike crude oil, and that's going to boost oil seeds, including corn and soybeans, and that might help twist the arm of President Xi. These are interesting times, and I wouldn't rule out something incredible like this. Either way, a pullback could result in a resurgence of folks coming back into the market like the funds that wish they hadn't rung the cash register. This summit will likely be a turning point where things could shift and the markets could pivot and really accelerate in the last half of May. Corn, beans, and wheat are all in an uptrend. Wheat is really stepping on the gas here today. And let me also say this whole Iran-China deal, the playing of crude oil and fertilizer like they're poker chips, things could get really crazy. Not only could China respond by making some very wild moves, I mean, Japan attacked Pearl Harbor after we cut off their oil, but pinching off food and fuel like this could make the world very protective of their food and energy security. Different nations could put export caps on, where it's not a matter of how high prices could go, but it could be a factor of where can you even get your hands on any, regardless of how much money you're willing to pay. If the world doesn't have a plan for how to physically get their hands on diesel fuel or fertilizer, they might be in for a world of hurt. But what about the United States? We are sitting on a mountain of crude and plenty of refinery capacity for gas and diesel and tons of natural gas. We've got access to nitrogen and potash. But it's phosphates that might seriously be at play. Booking phosphates into crop year 27 might be one thing, but making sure that it's physically deliverable and not simply promised and failure to deliver where your supplier declares force majeure and you're left with no phosphate and no recourse for the failure to deliver. It's time for you guys to start thinking like the old world of globalization that we've had for over 80 years since 1945 is coming to an end. It's time to start thinking about how things were back in the old days. Crude oil futures contracts that cover globally available crude markets, those might look a lot different in the future. If you're on trial, call and sign up today. Use the code word New World to let that representative know that you heard it from here, from me. And we can get you signed up, and I will give you an extra 2 months of service for each year that you sign up for. 1 year subscription, you get 2 additional months for free. A 2-year subscription with a prepaid discount, you get 4 extra months for free on top of your prepaid discount. A 3-year subscription, you get the picture. Call or text. The code word is New World. In cotton, old crop cotton hit an overhead target for us here this morning. Hold on to your hats. Everything I'm seeing on the charts tell me that it wants to scream higher still. I am bullish cotton. Cotton could have a lot more left in it. The crude oil scare is fueling this, and China is behind the buying. Are they seeing the writing on the wall? You're seeing it in cotton here first. In fats and feeders, Trump is pushing to get meat prices down, and that put the whole cattle complex in a little bit of a tizzy here. The market is unsure if the needle is going to move or if it's really not going to mean much for the short term. And I'm not really too sure either, but it tells me one thing: we are likely in a sideways trading range for some time to come. And in hogs, the nearbys are weak, the deferreds are strong, and there's a great divide going on here, and it could continue. Spread these markets if you need to. If you're going to be long the deferreds. If you're going to be short the nearbys. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.